as a result of which I think there was a lot of write-offs done, and for the next leg of growth in the retail assets, IDFC First Bank had to continuously raise capital and dilute equity. Their diluted equity, I remember, even at levels of 2021. And until very recently, also they were successfully able to raise a lot of capital with very marquee names on it. So now I think the positioning of the bank is looking extremely good. I think the asset mix is extremely good. They are one of the best names in the industry, and PPOP are also very, very strong. More importantly, I think going ahead, there is a good chance that the credit cost should also start to decline. And all of this, in terms of valuation, if we look at on an FY26 basis, it is at around 1.7, 1.8 times, which I think is not extremely pricey. And probably we have seen in the market that there's been a lot of fancy for mid-tier or the frontline private public sector banks. And a lot of private sector banks, I think, have kind of been leg out in this rally. Our sense is, I think, the next leg of growth for the banking sector, such, I think, private sector, mid-tier private sector banks should do extremely well, and which is where IDFC First Bank is certainly.
Right. What are the charts indicating then, Rajat? The stock sometime in September last year made a high of around 100 rupees and has been in a bit of a decline since then, has not managed to retest those levels. What are the charts suggesting? What are some of key levels that you need to watch out for?
The key levels would be 82 to about 84.50. If this range is taken out decisively, then a fresh upswing can happen. Otherwise, it is in a range-bound situation since April, and the range between 75 and 85, it is hovering around, except for the days when the market fell very sharply. It went down to below 72. What I would like to say is that personally, I also track banks, and I prefer a 1.75 return on assets for a minimum. And this is far away from that as of now. But it is definitely going to be a good bank going forward. But if you were to buy a bank, better get the ROA above 1.75. Look at the top class banks like HDFC or say ICICI and others. They are maintaining above that level. Of course, this is a new bank. It will take some time. Definitely, it will move up. But as of now, you have to be a very long-term investor in order to buy